Hello and welcome to another video. Today we're going to talk about stocks and shares and why these are the single most important asset in your portfolio. To understand exactly how they work, what they really mean and how you guys can get into them. So let's go and let's check this out. Before we get started, let's hit that like button and smash that subscribe button and let's go into the video. There are three main financial assets. These are stocks, bonds and real estate. So today we're going to talk about stocks and why these are the main foundation of any portfolio. These are by far the most popular asset for individuals, but also for these huge institutions such as pension funds, insurance companies. What makes stocks so popular is its historic performance, which have been, quite frankly, spectacular. Since 1957 to 2018, the average return in the stock market has averaged around 10% a year. Stocks, shares and equity are pretty much the same thing, and you'll see that in the financial press and in normal press that these names just get thrown around interchangeably. So don't get confused if people mention them. Stock is the ownership fraction of a company, which means that this is the total amount that is up for ownership. And a share is a percentage unit of that company. So let's use an example. Someone comes to you with a lemonade stand and says it is worth $100. Believe me, this is a great lemonade stand, so you won't want to miss out on this. So that stock is worth $100. However, they don't just want to sell it in one big block of $100. They want to split it up so more people can buy it. So instead of one big $100 block, they're going to split it into 100 $1 blocks. And those $1 blocks are called your shares. So let's say you then use $5 of your money to buy 5 shares. Therefore, you own 5 shares of the company. Out of the 100 stocks, you own 5% of the company. It's as simple as that. What this means though, is that with your 5%, you have a claim to the company's assets and its future profits. Now, let's just consider, instead of owning 5% of a lemonade stand, you actually are owning a percentage of some of the largest companies in the world. These are the likes of Apple, Google and Facebook, which all have shares which you can buy in the stock market. One thing to remember is that when you own a stock of a company, you own a share of its profits. You can't just walk in and decide that you want to take a chair, or if you own a share of Apple, walk into the Apple store and take an iPhone because you own a few percent of the company. This is not how that works. Ultimately, you own a percentage share and entitles you to the profits of that company. So I'm sure you're wondering, why do companies issue stocks? Well, the main reason is to raise money. This is to enable them to invest in the future, create more profit. Just thinking back to the lemonade stand, it was selling lemonade and it was making good profits. However, if it wants to open another lemonade stand, it can use the money that it has taken from the sale of the shares to then reinvest and open up another premises so that it can sell more lemonade. This raising money and the ease in which raising stock can be has been around for hundreds of years, with the first stock sale being in 1602 with the Dutch East India Company. So most companies have shareholders. The small companies who maybe deliver you parcels or corner shops, they are probably companies who will have shares. However, those shareholders might be family members or just small investors. We're going to talk about what's called public companies. And these public companies are normally the biggest companies in the world. And the reason they're called public is because they enable just the general public access to buy these companies. So why are stocks so attractive and why are they so important? Of all the financial assets, which I'll be covering in later videos, including the likes of bonds and real estate, stocks have outperformed the wall over the long term and average around about 8% per year. And one of the things which is so great about them is it enables you to access some of the largest and most popular companies in the world. I've already mentioned you can buy shares in the likes of Facebook, Google and Apple, but there's also other companies which we use day to day that also have shares on the stock market. This is great because when companies like Apple report profits, as a shareholder, it enables you to benefit from those profits. And every time you buy that new iPhone or that MacBook, you get to benefit. And also it's the ease in which you can buy stocks and shares. To go onto the internet and access internet brokers, you can easily open an account and buy shares straight away. And finally, one thing that really sets them apart from all other assets is that they are liquid. And by liquid, I mean they can be turned into cash very easily. When you buy a share in a company, if you don't want to hold it anymore, or you need the money for another life expense, you can normally get that money turned into cash really quickly, so it's ready for you within a few days, which isn't the case in the likes of real estate when you buy or you sell a house. It can be very difficult and time consuming to then turn that property back into cash. So ultimately, what does it mean to own a stock? You have shares in a company, enables you to benefit from the profits of that company. You also get things like voting rights, which enables you to vote on the big decision, such as electing people to a board or a new CEO, or how much dividend it pays. And that brings me to one of the biggest things and one of the most attractive reasons that people own shares, is how they get paid. So one of the most attractive things about shares is the fact that they make money. Why else would they be financial assets if they didn't make money? So they make money in two ways: capital gains and dividends. Capital gains are what everyone imagines when they buy a share. They buy it today at $10 and sell it tomorrow for $20. That profit of $10 is called capital gains. And in the long run, shares generally go up. I say generally because, as we know, stocks can go up and can go down. But when people say the stock market goes up, they're generally talking about the value of the shares. So if you buy low and sell high, then you make a profit. The other way you make money from shares is dividends. So dividends are great. What they are is little bits of money as a reward for being a shareholder. Generally, companies make a profit. Each year, they'll spend that profit to make them bigger, enable them to make more money so that they make more profit next year. However, a lot of the time, they don't use all of their profits. And this extra bit of profit, they want to pay back to shareholders as thanks for investing with us. And thanks for trusting us for holding your money. So dividends can be paid annually, 6 monthly, or quarterly. And this is a small amount of money, range anything from 10% of the value of the shares right the way down to a tiny few percentage points. People love dividends because whilst you can trade on the capital gains, buying low and also selling high, dividends enable you to just buy a share, hold that share, and just benefit from the quarterly, semi-annual, or annual payments which the company give you. Meaning that just like rent, you can earn money whilst you sleep. These become massively, massively powerful when you hold assets for a long time and the capital gains grows and grows and grows. The amount of dividends that is paid to you can be the same price as you paid, which ultimately means you stop owning the stock for free. I hope this has given you a good overview of exactly what stocks are and how you can benefit from them, and what people mean when they're talking about stocks or when they've received dividends. This is a really important part of your financial education to really understand this huge asset class, which is the most popular asset class out there, and why people love investing in it. And most importantly, it enables you to fully understand how people are making money and understand why and how you can do it yourself. Thanks for watching this video, and I hope you've enjoyed it. And if you did, make sure you hit that like button and smash that subscribe button, and I'll be back next time.